Hello and welcome to NorthStar's YouTube channel. My name is Irfat and today we are going to learn one of the most ignored area in CPA odd exam, engagement letters. This is going to be series of videos wherein I'm going to talk about engagement letter for preparation engagement, for compilation engagement, reviews and also audit. So stay tuned. Let's get started. Preparation engagement letter. This is the first one in the series. I hope you remember under SSARS, preparation, compilation and review engagements are covered. This is very important area because a lot of questions are very frequently asked from just the engagement letters. One very important point you must remember, if you focus on this engagement letter, you will be able to enjoy the concepts that we learn here in compilation engagement, in review engagement and also in audit engagement letters. Because there are a lot of things which are quite common between all these three engagement letters that we will be doing in the next video. Let's get in with the first one, the preparation engagement letter. Preparation engagement. Quickly recollect. Does the accountant need to be independent when you get on for a preparation engagement? Answer is engagement for preparation does not require auditors or accountants, rather independence. So independence of the accountant, we do not look at it at all. In the preparation engagement, all of it and a lot more is very specifically mentioned. Remember, without engagement letter, you cannot start or accept the assignment. In other words, if the client is not willing to sign the engagement letter, should you accept the assignment? Answer is no, you will not accept or withdraw from the engagement itself. So, very important prerequisite before you start the work for your client. Appropriate representative of the management. So it is addressed to the appropriate signing authority who is going to eventually sign this engagement letter. You have requested that we prepare what? So we prepare the financial statement. Name of the company is required. Now, financial statement comprises of what? You need to be very specific. Because under each financial reporting framework, financial statement definition changes. For example, under US GAAP or under IFRS, under Ind AS, each reporting framework requires a different or has a different definition of what constitutes a financial statement. So let's be very specific. Financial statement of the name of the company, which comprises of what? The balance sheet as of December. The US financial year is January to December. So December ending period is mentioned. And what all does it comprise of? So it comprises of statement of income. It comprises of changes in stockholders' equity. Remember, and the statement of cash flow for the year ended and related notes. Now, this is very important. Most students forget that financial statement also comprises of the notes. So remember, it comprises of statement of income, changes in stockholders' equity, cash flow and notes, and of course, the balance sheet. I'm sure balance sheet none of you would ever forget. We are pleased to confirm our acceptance and our understanding of this engagement to prepare the financial statement of which company? The ABC. So in the first paragraph, remember, we are talking about financial statement, all the different components of the financial statement. We are talking about the name of the company and we are also talking about the year ending. These are the important points. Let's go to the next paragraph. Our responsibility section is a very, very important section, quite frequently tested in the exam. Under our responsibility, the accountant mentions what all he or she is going to be doing. what all rules, regulations that they are going to be following. All that is very specifically mentioned in the engagement letter under our responsibility section. In exam, you need to know which part is covered under which subheading. For example, which part is covered under our responsibility section. Similarly, which part is covered under management's responsibility section. You should be able to distinguish which is accountant's responsibility and which is management's responsibility. The objective of our engagement is to prepare financial statement. Now, how are you going to prepare financial statement? Are you going to prepare under Ind AS? Are you going to prepare as per IFRS, or are you going to prepare as per US GAAP? So you have to be very specific in your engagement letter as well. So we are going to prepare in accordance with accounting principles generally accepted in the United States of America. Let's be very specific. Tomorrow, it should not happen that you are supposed to follow US GAAP, but you followed IFRS. That confusion cannot happen. It has to be specifically mentioned in the engagement letter. So in accordance with accounting principles generally accepted in the United States, which in simple words means US GAAP, you are going to prepare as per US GAAP. I will ask you one question a little later. Remember this point, US GAAP here. And on what basis are you going to prepare the financial statement? Are you going to check the details, or are you going to verify the correctness or the completeness of the data that I have provided? Answer is no. You are going to prepare it based on information provided by you. By you in the sense by the management. So whatever information the management is going to provide, based on those information you are going to prepare. You are not going to check the usefulness, no, the completeness of the information that you as an accountant are being provided with. Remember this point. We will conduct our engagement in accordance with what? So this is again important. So you are going to conduct based on SAS, which is the auditing standard rules, or based on PCAOB, which is for public companies or issuers? Answer is no. Preparation engagement is covered under SSARS. So you are going to prepare it in accordance with the statements on standards for accounting and review services, which we call it SSARS or SARS. Promulgated by whom? Who has issued these SARS? So that is also going to be mentioned, Accounting and Review Services Committee of the AICPA. So remember, you are going to prepare the financial statement in accordance with US GAAP based on information provided by the management, and we are going to carry out the preparation engagement in accordance with SARS, which is promulgated or issued by the Accounting and Review Services Committee of the AICPA. While carrying out the preparation service, do I need to follow some code of conducts also? Answer is yes. So that also needs to be mentioned here, that and comply with the AICPA's Code of Professional Conduct. Important points you must remember. Now, in the first paragraph here, we talked about in accordance with the accounting principles. We have talked based on information provided. Now, in the next paragraph, we are going to be more elaborative about information provided. Let's be more specific. So, in the next paragraph, we will specifically mention we are not required and we will not verify what? The accuracy and the completeness of the information. We are not going to look into the accuracy. We are not going to look into the completeness. Whatever information you have provided, I am going to prepare the financial statement based solely on that. I'm not going to look if these are correct, if these are accurate, if these are complete. That's not my job in the preparation engagement. Of the information you will provide to us, or otherwise we are not going to gather any evidence to verify the accuracy or completeness. That is not our job in preparation engagement. We do that only and only in case of audits, for the purpose of expressing an opinion or conclusion. So we are not going to express an opinion. We are not going to give you any conclusion. Accordingly, we will not express an opinion. We are not going to give you any kind of conclusion, and we are also not going to provide you any assurance on the financial statement. Remember, it's a preparation engagement. We do not provide any report. We do not provide any opinion. We do not provide any conclusion, nor do we provide you with any assurance. All these are covered in separate engagements, but not in preparation engagements. No assurance, no conclusion, no opinion, and also no report. In the preparation engagement, we are being very specific about it. Our engagement cannot be relied upon to identify or disclose any financial statement misstatements. Remember, it cannot be relied upon to identify or disclose because that's not our job. We did not look into the accuracy. We did not look into the completeness. How can I comment if everything is fine? We did not look into those aspects at all, including those caused by fraud or error. So I have not looked into accuracy. I have not looked into completeness. I have not looked into any aspect which could have caused due to fraud or error. Or we have not looked into anything which can help us identify any wrongdoing. That's not our job in the preparation engagement. Now, we have talked about what are we going to do, what are we not going to do in our responsibility section. Next comes the management responsibilities section. What all are management's responsibility? I'm going to make it very specific so that tomorrow we do not debate or get confused. Was it our job? Was it your job? Let's be specific in management's responsibility section. The engagement to be performed is conducted on the basis that management acknowledges and understands that our role is the preparation of financial statement in accordance with accounting principles generally accepted in the United States of America. So one question, is US GAAP referred to in management's responsibility section, or is it referred in accountant's responsibility section? Answer is, it is actually referred in both the sections. Management has the following overall responsibilities that are fundamental to our undertaking this engagement. Means if management declines to accept these responsibilities, we are not going to take up this engagement at all. So management has to accept it before we can continue on this engagement. This has to be done as per SSARS. Remember, SSARS is applicable on whom? Is it applicable on the management or is it applicable on the accountant who's the CPA? Answer is SSARS is applicable on the accountant who is performing this preparation engagement to prepare the financial statement. The first one. Now answer my question. Who is responsible to decide whether the financial statement has to be prepared as per IFRS or as per US GAAP? Who is responsible? Should the accountant decide for the company or should the company decide for itself? Answer is, naturally, the company should decide for itself. It is not accountant's job to see what should the company be following. So let the company be specifically mentioning that it is their responsibility. What? The selection of accounting principles generally accepted in the basically US GAAP. Next one. It is management's responsibility to prevent and detect fraud. It is not accountant's responsibility. It is again management's responsibility to ensure that the entity complies with the rules, the regulation, the law of the land. It is again management's responsibility that should be specifically mentioned. You remember in the our responsibility section, we have mentioned a lot of things. If you can read all of that and recollect, you will find whatever is not accountant's responsibility becomes management's responsibility, because one of the two has to be accountable. So if the accountant says completeness, accuracy is not my responsibility, which in other words means that it is indeed management's responsibility. So the accuracy and completeness of the records, the documents, the explanation, or any other information, including any significant judgments that the management has made, that is solely and solely management's responsibility. It is also management's responsibility to help us prepare the financial statement by providing all the necessary documentation and all other related information. Because unless they provide all the documents for us to prepare, I'm not going to be, able to prepare. So all the documentation and other related information that is relevant to the preparation should be provided by the management. Similarly, any additional information that may be required that we have requested to the management should take it on their own to provide me with all those necessary additional information, which is important for me to prepare the financial statement. Similarly, if I need to talk to any person, if I need to interact with any accounting person in the company, I should get unrestricted access to talk to that person within the company. Remember, within the company, I'm not asking for authority to talk to outsiders. For example, the lawyers of the company, the external advisors of the company. No, I want access to talk to people within the organization related to financial matters where I see it is important to gain that information to help me prepare. Remember, I'm not going to talk to see if everything is in order. I'm not going to talk to find out if internal controls are placed properly. All that is not what we do in preparation engagement. The financial statement. This is very important from exam point of view. Remember, I told you in preparation engagement, there is no assurance, there is no opinion, there is no conclusion. So what do? I have prepared a financial statement. So financial statement generally will be income statement, one page, balance sheet, another page, statement of changes in equity, third page, and fourth page would be statement of cash flow, which may be one page or maybe 2 pages. So in total, around 4 to 5 pages documents are going to come out from preparation engagement. Now, is it possible that the auditor or the company never tells the users, is it a preparation engagement or is it audited document or is it compiled document or reviewed document? It is confusing. So understand, the user of the financial statement are innocent. They do not know what is SSARS, what is compilation, review, preparation. They may not understand all this quite clearly. They may be completely unrelated to accounting world, maybe engineers, maybe doctors. They also want to understand. It may be necessary. So how do I communicate to them that this is a preparation engagement or whatever financial statement they are looking at, it is from the preparation, it is not an audited document at all. How do I communicate? So what am I going to do? The financial statement will be accompanied by a report. However, you agree that the financial statement will clearly indicate no assurance is provided. Here will be accompanied by a report? No. Like I mentioned, we are not providing any report at all. So it will not be accompanied by any report. Remember, reports are provided only and only in attestation engagement. Preparation is a non-attestation engagement because we do not provide any report for preparation engagement. So it will not be accompanied by any report. Tomorrow, the client should not ask me, please give me report. No, I'm not going to give at all because it's a preparation engagement. So I'm going to make it very clear in my engagement letter itself that we are not going to provide you with any report. And we are going to clearly indicate in each page of the financial statement, no assurance is provided. No assurance is provided. So any user who is reading the financial statement below will find a note written, no assurance is provided. Will they understand that it is not an audited document? Answer is yes, most likely yes. They must have little knowledge of accounting. Next one. In case the management says, please don't put this, don't put this. Then what? Suppose out of the blue moon, the management comes and says, please don't put, no assurances provided. Should I do preparation? Should I continue with the preparation engagement with the client? Answer is no. I must withdraw. I must withdraw because the intention could be to deceive the users. I cannot be associated with any client who lacks integrity. So I should not agree. But I have got another option as well here. In case the management says, don't put this, I will look into another option. Or as part of our engagement, we will issue a disclaimer. Disclaimer is like a warning. We will issue a disclaimer, a warning kind of a document or a statement. Will state that financial statements were not subjected to any audit nor subjected to any review or compilation engagement by us. So we are going to make it very specific. If you don't allow me to put no assurance is provided, okay. Allow me to put this another statement that we had not done any audit, we had not done any review, we have not done any compilation engagement, and accordingly we do not express an opinion, conclusion or provide any assurance on them. So in case A, management says please don't put, I will put B. In case the management says don't put B also, what is the next thing I am going to do? I am going to withdraw from this preparation. I am going to withdraw from this preparation engagement. What are the other relevant information? Fees. Fees is also mentioned. Many students miss out. Fees is important. In the engagement, we have to agree with the fees. Tomorrow, there should be no argument around it. Please sign and return the attached copy of this letter indicating your acknowledgement and agreement with the arrangements for our agreement to prepare the financial statement described herein and our respective responsibilities of the accountant and responsibilities of the management. Sincerely yours, signature of whom the accountant or the accountant's firm, anybody can sign it. Acknowledged and agreed. So first the accountant needs to sign it and then send this engagement letter to the client. Then the client is going to sign it and put the name of the person who is signing, put his designation and put a date on which the engagement letter was signed. If you just understand and follow this much, you will be able to solve most of the questions in this topic. Let's look at some of the questions. A CPA is considering whether to accept an engagement to prepare financial statement for a new client. Which of the following statements is correct regarding the independence of the CPA? CPA should be independent of the client. A CPA is not required to make determination of whether the CPA is independent of the client or not. A CPA is required to disclose in the engagement report any relationship with the client personnel. A CPA should obtain management understanding regarding the benefits of an accountant being independent of a client. Now, before I answer, I want you to answer. In preparation engagement, do we require the accountant to be independent? Answer is no, not at all. The accountant independence does not matter in preparation engagement. So, correct answer would be option B. Let's go to the next one. For an engagement to prepare financial statement, which one of the following items should be identified in the engagement letter as management's responsibility? The determination of the level of assurance over financial statement, no question of assurance at all. The inclusion of the financial reporting framework description on the face of the financial statement. Was it on the face of the financial statement? Okay. The accuracy of significant judgments to be used in the preparation of the financial statement. And last one, the preparation of financial statement disclosures. Which one do you think? So the correct answer would be, we are going to D? No. The accuracy of the significant judgments. Do you remember? I don't know why many of you said D. You remember, let me go to the point where we talked about significant judgments. Do you remember here we talked about significant judgments, where, let me take you through, I had made it underline as well, including significant judgments here. Point number D. Point number D, the accuracy, completeness of the records, documents, explanations and other information, including significant judgments. Alright, so correct answer would be option, the accuracy of significant judgments to be used in the preparation of financial statement. Let's look at other question. During an engagement to prepare financial statement, an accountant was precluded by management. Precluded means he was not allowed to. He was stopped. He was restricted. Precluded by the management from including a statement on each page of the financial statement indicating that no assurance is provided. Which of the following actions would be appropriate? Issue an adverse opinion on the financial statement. We don't provide any opinion in preparation engagement. Option A, not possible. Limit the distribution of the financial statement to specific users. We did not read that. Perform sufficient procedures to allow the accountant to provide limited assurance on the financial statement. And the last one, issue a disclaimer making clear that no assurance is provided. Which one do you think is the right answer? So correct answer would be option D. Good. Next question. Each page of the financial statement in a preparation engagement should include a statement indicating no assurance is provided, the accountant's firm name, a statement referring to the user to see the independent accountant preparation report. Preparation report, do we provide any preparation report? That to independent accountant? No, neither independent nor any report. A statement indicating that the financial statements were prepared in accordance with Statement on Standards for Accounting and Review Services. So question is very clear. It is not asking what should be contained in the engagement letter. It is asking what should be mentioned in the financial statement on each page of the financial statement. So correct answer would be option A. Very good. Let's go to the last question for today. Which of the following most likely would be included in an accountant's documentation of a preparation of a client's financial statement? The results of analytical procedures. Remember, analytical procedures we only do in review engagements. Next one, engagement letter, management representation letter, accounts receivable confirmations. Which one should be included in accountant's documentation? So the correct answer would be option B, the engagement letter. So one answer I saw you giving me incorrect. That's okay. Out of 5, we went 4 right and 1 wrong, which means 80% you have understood correctly. So mark this question important, because wherever you go wrong, that question becomes important for your preparation. And that's all I have for you in this video. I'll see you soon in the next video. If you liked it, please click on the subscribe button, press the bell icon, and stay tuned for many more videos coming up for your CPA preparation. See you in the next video. Till then, bye-bye. Have a great day and take care. Thank you.